Let's come back to the big story. The Central Bank of Nigeria today reaffirmed the stability, strength, and resilience of the country's banking institutions and the financial system in a two-page statement. The Central Bank explains that its recent directive to banks on loans forbearance, dividend payments, and capital issues are part of its routine transitional guidance for only a few banking names in the country. Let's get into these and what the clarifications has been from Zenith Bank, one of Nigeria's largest and most capitalized lending institutions. Joining me live to discuss this is Professor Uche Uwaleke, the president of the Capital Market Academics of Nigeria. Sir, we thank you for making the time into the studios for this tonight. Welcome.
Thank you so much, Watson.
The Central Bank, Professor, the Central Bank in the past few hours have clarified its transitional guidelines for new banks, for few banks in relation to single obligor limit, the capital adequacy, and also on. Give me your thoughts on that.
Well, that circular, of course, is, you just said it, a two-page circular. The details, I'm very sure the Central Bank has, in its wisdom, sent to the banks. Of course, one should also expect that it's not as if all the banks are affected, it's just some select banks. And what the Central Bank has done between June 13th and now is to deal directly with those banks. So I'm not also expecting the Central Bank to make known or public, the names of those banks for obvious reasons. I mean, people have said, why is Central Bank not letting the public know the banks that are affected? And I say for obvious reasons, because any action of the Central Bank in that direction could trigger an overreaction, could also trigger some negative consequences for the for the financial sector. And I'm sure the Central Bank is very conscious of that. And I tell you, sometime last year, I had the privilege of embarking on a study tour, a study visit to some central banks, the Central Bank of Egypt, the Bank of England, and the Bank of Italy. That's the Banca d'Italia. Now, one thing you find that is very common is that those central banks across the world are usually discreet, when it comes to disclosing information they consider, sensitive, to the banking sector. Central banks are expected to follow the international financial reporting standards, but they'll tell you in their reports clearly, yes, that they follow international financial reporting standards, and also any regulations, their local regulations, in our own case in Nigeria, for example, the ones by the Financial Reporting Council of Nigeria. But that's only to the extent that those regulations or the standards are not considered inimical, to financial systems stability. So what the Central Bank has done is very much in order. The way the Central Bank is approaching the issue.
Yes, Professor, thank you so much. How crucial, when you talk about banking system stability, I'm sure you've gone through that two-page statement. The Central Bank says Nigeria generally maintains risk-based capital requirements that are significantly more stringent than the global Basel III minimums. So when we talk about banking system stability to the state of Nigerian economy, even as the government walks through some of the crunching reforms over the past 2 years, and the banks also working through the recapitalization program?
Well, let me even take you back to how it all started, how it all began. Recall that in 2020, during the COVID era, the Central Bank had reason to announce forbearance measures to banks. What is forbearance, by the way? If you like, regulatory leniency, relaxing some of the regulatory requirements for banks, not only with respect to single obligor limit, but also with respect to allowing them to restructure their loans, with respect to loan classification and loan provisioning. Take the case of single obligor limit, for example. The BOFIA, is very clear on that, BOFIA 2020, that a bank is not allowed to lend to a person or a group of persons any amount that is in excess of 20% of its shareholders' fund unimpaired by losses. Of course, a number of banks, before then were in breach of that. And secondly, too, whenever your loans are over in terms of interest and principal repayments, if they're overdue by 90 days, you should regard them as non-performing. Okay, and the prudential guidelines also made provisions for how you should handle that. If you have a case of interest and principal that's overdue for more than 365 days, you should even do 100% provisioning. Okay, between 181 and 365, 50%, and so on and so forth. So what the central bank did at the time was to grant forbearance, to say, okay, instead of allowing you to do full provisioning, okay, we'll allow you to carry, not to do that, to enable you to continue to lend. Because the impact of full provisioning means you are charging that to your P&L, you're reducing your bottom line, and ultimately you're going to hit your capital. Yes. And once you hit your capital in your statement of financial position, you're also reducing your shareholders' funds, and again, constricting your ability to lend.
Technically, Professor, so the central bank was in order to issue this statement and say, look, we're keeping an eye on everything, ensure that everything is good ahead of March 31st next year, when the bank recapitalization program will come to a close. So let's check through one of Nigeria's banks, Zenith Bank financials for 2024, to understand what you talk about the resilience of the big or systemically important banks in Nigeria at this point in time. I'm just going to bring on a few of those data out there as far as Zenith Bank is concerned. What do you see when you look at the total assets of the banks, their financial capacity at this point in time to remain resilient and systemically important, not just to depositors, but to investors and to the Nigerian economy as a whole?
Okay, yes, I was impressed reading Zenith Bank's, a corporate disclosure on the website of the Nigerian Exchange, where it's, made it very clear that Zenith Bank is in a position to address all its forbearance arrangements, with the central bank by the end of June, this year. Now, if you look at the earnings of Zenith Bank, even the one that is out there, the Q1 earnings, close to 1 trillion. Okay, that is for Q1. And then for Q2, it's been projected to be in excess of 2 trillion. And if you now use that and relate that to all its forbearance, exposure, which is around 1 trillion, it simply tells you that Zenith Bank, is in a position to address all forbearance issues, to do with the central bank. So I expect that by the end of this month, Zenith Bank should be able to exit that forbearance arrangement and should also be able to pay dividends to its shareholders. Zenith Bank has had this track record of dividend payment. It's one of the companies you can call an aristocrat when it comes to dividend payment. In 2022, if you recall, Zenith Bank paid 3 naira 10 kobo, dividend, both interim and final. In 2023, it did 4 naira. In 2024, it did 5 naira. So you can see the consistency in dividend payment. So any investor that is, of course, looking for yield, of course, dividend matters when it comes to investment. I think Zenith Bank is one bank that has shown that in terms of rewarding investors, that is one bank to count on. And looking at the figures, really, from my perspective as a researcher, what my conclusion really is that the current price of Zenith Bank, today is, in my view, underpriced. In my view, undervalued when you look at the entire fundamentals of Zenith Bank. Zenith Bank today is, I think, trading at 48 naira.
You're not surprised, Professor Uwaleke. Zenith Bank shares climbed 5.32% today. The banking sector, broadly speaking, returned to positive today, this Wednesday, after the sell-off that we saw Monday and Tuesday. Yeah. So you think, is there any need for concerns by investors in bank shares and the general banking public? Is there any reason for concern? Absolutely, no reason to fret over that. If you look at even other banks, we know Zenith Bank again is one of the banks that has met the 500 billion naira minimum capital requirement. Ditto for Access Bank. Access Bank too has also released something on the website of their own corporate release, saying they are also going to exit by the end of June. And of course, we know for GT and Stanbic, these banks are already out of the forbearance arrangement. So I think the banking sector, in line with what the central bank has said, is very strong, is very safe, and is very stable. And I want to believe too that if you look at their capital adequacy ratio, earlier on I mentioned the Basel III. Basel III minimum around 10.5 for international banks, those with international license. But in Nigeria, we even have something higher, at 15%.
Capital adequacy ratio for banks, more than minimum. You also have liquidity ratio in excess of 30%. You have non-performing loans less than 5%. That of Zenith Bank, for example. Zenith Bank non-performing loan is just at 4.7%. Okay, so when you take all this into cognizance, the only conclusion you can come to is that our banking sector has remained strong, and banking stocks in particular, will not fail investors, any day.
All right. We appreciate those deeper banking and finance industry sector insights and perspectives. Thank you so much, Professor Uche Uwaleke. Do have a wonderful evening, and thank you once again from our studio.